Would appreciate a feedback from your end as well. Give me a few moments while I run the tests and everything. While we do that, here's the disclaimer on screen. And yes, we are live. Hello. Hello. Yes. So in that case, let's proceed with our regular webinar. First of all, going through the about us part. So those of you not much familiar, my name is Nirav. I'm the admin owner of 50years.com website as well as the 50 Years Market Analysis YouTube channel where this broadcast is currently being done live and we have been doing these live webinars. These are called trading opportunities, and it is a weekly webinar series. We conduct one every Friday at 2 p.m. GMT, 7:30 p.m. IST. So just convert it to whichever time zone you are in, right? And in the series of webinars, we have so far captured 255 trades, which includes three of the setups which were discussed in our last webinar as well. So 255 in last 109. Right. Going further ahead and talking a little bit more about my work so far, I'm also the author of the book Think with the Markets, which is available on Amazon's Kindle platform, electronic delivery. I'm also the author of the course on Elliott Wave called The Complete Guide of Professional Trading with Elliott Wave. It has 1600 plus students. You can check it out by heading to 50years.com and then clicking on Elliott Wave course in the middle. Right. And before we proceed, we always like to show off our past record, which I have been keeping since 2016. All the analysis webinars published on YouTube, you can see, have had an accuracy of 80% plus, going as high as 90. And you can see 2018, 2019, 84.88, so on and so forth, 88.52, and 2021. After 2021, we started doing a series of weekly webinars, which you are currently watching, right? So that being said, we have had an accuracy of 80% plus for consecutively 6 years and counting, because we are still doing these webinars, although we do not maintain a Excel spreadsheet record for these. So basically pointing out that we are above all industry standards, and I personally have not seen such a track record from anyone in this industry after working it so many years. You can, of course, check all of this by visiting 50years.com/forecast accuracy. It's all a matter of public knowledge. All these links are YouTube videos, etc., and my website pages. So it's all public and it's been available there for many, many years now. Right. With that being said, the webinar which we conduct will go through this sequence. We first discuss euro, followed by crude, gold, S&P, Nifty, and in the end we will discuss Bitcoin. Right. And before we discuss all these charts, I will always look at what I discussed in the last webinar, then do the analysis. If you have any doubts regarding my analysis, you can post in the live chat, of course. Right. That's what the live chat is for. That's why we do it live. And with that being said, let's now head over to our actual chart discussions. First of all, we will like to load up the chart of, okay, gold has given up some substantial moves. What I like to do is take a moment here because I have a long position on it. I like to trail the stop loss at this point, and we will discuss all about gold when we reach the gold point. Let's trail it. All right, done. So yeah, as I was saying, we would like to discuss all the details of this position and whatnot. Currently, I have trail my stop to 2397, and will last alert. should go now. So before moving further, we'll just have a quick look at what Euro is doing. I'm also having a short position there. That's good enough. So yes, let's now continue our discussions. And okay, and first of all, I have some comments here. But yes, let's just get into the discussion first, and I'll check the comments in a moment here. So first of all, here's the chart of Euro on screen, and it has fallen down as per our analysis, which we discussed in the last webinar. Literally, as per our analysis, like nothing left or right, completely as it is. So before we dive into the actual chart, here's the quick check on the last webinar. Euro 109. By the way, you can yourselves check visiting 50 eyes market analysis YouTube channel. Handle name is at the rate of 50 eyes, as you can see. Go to the live section and click the 109th webinar, which is the last webinar which we conducted on 5th of April 2024. And here is the Euro chart currently on screen. The idea was, as you can see here on screen, short below 1.07248. The count was that of a triangle, as you can see over here. And of course, if you want to check the whole idea, you can just check it in the webinar itself. I'll also discuss it today. And let's see how it's going. Here's the live chart. So the count has played out picture perfectly, like literally as it should. And the count has not changed at all. It is literally the same which we discussed in the last webinar. We have expected a triangle formation here from this point of reference. This is a price level of what is 1.04487 something, roughly speaking. Time or date, I should say, is around 4th October 2023. From there on, we have expected A, B, C, D, and E kind of movement. And this was the setup. And as we did say in the last webinar, this is the recording from the last webinar, 1.07248. So 1.07248. So somewhere here, below here, we were expecting or interested in adding shorts. I personally added shorts above it around 7.6 or 7.8 something, somewhere here. We'll have to check the exact for sure. But anyways, I added shorts, got out 10 profits, then added more. And we are still having some shorts open here, right? So long story short, it has played out precisely as expected. So what are we expecting here? There are two things which are possible. First of all, we can have something like this, an A and a B, and then this could be a C, but no need to be so hopeful. I mean, if it plays out, then good for us, good for me at least, because I'm holding shorts on this counter. But overall, we have to consider the secondary possibility, which is that this market may have a corrective continuation. Right. This is what we discussed in our last webinar as well as a secondary possibility. And what we did say was we measure this one and look to project it. Right. So long story short, there is a possibility that this market is just giving us a wave B correction, not as a triangle, but as a zigzag, and with the current leg being a B wave in the downward direction for the same. If that is the case, then I will have to leave my shorts with some trailing stop loss, which it is already having. Right. In case it turns north, then of course my trailing stop loss will hit. And if it does not, then most likely we are going to see something like that. Right. So both possibilities exist. I don't know which one is it going to play out, but I am already well positioned. I have already taken good, actually decent profits from it. They were the biggest profit in the week on Euro USD shorts. And let's see where it goes from here. Some minor targets we can check out here are, one second, I did forget completely about the chat. Hello, Sushil. Nice to see you in the comments as always. And Martin, of course. Hello, our usual regular viewers. Hi, Luis. Good morning to you. And hello there. So yes, let's get back to our discussions. What I was saying was we wanted to check the minimum expectations for this leg. So minimum is kind of already done. What I was trying to check was 50% of this leg. 1:1 is too deep, not the kind of level we want to check. And 50% we can check more precisely like this. So as you can see, 50 is already done and it's already near 78, and then it will go to 100. So it has done the bare minimum stuff. What I'll do is trail and continue to trail. I already have a trail. I'll just reduce it and reduce it. It's in a free trade right now. That is our stop loss is below entry. So whatever happens, I'll get out in profits. That's about it for euro. Nothing further to add. If you guys have any questions, you can just ask. But from my perspective, either it will do this. Let's call this as our H1, or it will do something like this. Minor down move followed by up move. That's about it for our discussion on euro. Nothing much to add. All right, guys. By the way, I can see the comments are there in the live chat, but they are like few minutes ago. If you are still able to hear me and everything was clear, just type in clear or something so that I know the webinar is going fine. I'll also check one more time at my end if the audio is going on or what. What happened here? Minor down move followed. Yes, it is working at my end at least. All right, with that being said, let's now head over to our next chart, which will be the chart of CL, of course. And this one also has been moving as per our analysis. Of course, we'll just check the last stream before heading over to the current chart. So this is the 109th webinar, which was again conducted on 5th April 2024. Let's see our discussion on crude somewhere around here. We were discussing it. Thank you, Martin, for the clarification. So we were discussing crude oil somewhere over here in our last webinar. And let's see what was being said on this chart. So we were thinking, let's see. Yes, so this was a clear play, long of 87.43, and only look for swing longs as long as the market holds this level. This marked level was actually 84.84. I have mentioned it in the webinar. You can, of course, go ahead and check in the last recording by visiting the YouTube channel and checking the 109th webinar from the live section, right? So this was the play. Look for longs above 87.43 or swing longs as long as the market holds 84.84, right? And now let's head over and check the actual chart of CL. I am currently holding long here, by the way. Did take long, let's see, somewhere here. Around 86.7, I had entered longs on this. The idea was as per the red count and seems to be following so far. Right. So what we have over here is, let's see, from last webinar, which was on 5th April. Somewhere here, we were doing the live webinar last time. And 87.4 is here. Did break that, took resistance. And what do you know? It actually did never close below 84.84, which was the level we mentioned. It did go there, touch it, but never even closed below it. So swing long perspective, it's holding very, very nicely. The analysis we discussed in the last webinar played out perfectly, right? And that's why I'm holding long on this counter anyways. So what I'll have to do over here is again, one of those cases where if you were in the webinar, you would have known what to do. And currently we'll just trail the thing. There is a chance here, by the way, that it can do some sideways drama here. So the trail cannot be very aggressive. I still have to possibly keep the trail below my entry, right? So I can just reduce the risk at this point, cannot get into a free trade, I think, right? But once it crosses 88.4 or something, then maybe that's possible. But count wise or Elliott Wave perspective, what we have over here is a 1 up, 2 down, and then 3 up. This is basically a structure of an impulse. We are looking at possible 4 complete, and we are heading for the 5th, right? That is the count which we discussed in the last webinar, and that is the count which is playing out. Targets for 5th, I don't think I have given long-term targets of anything here so far, but we can just quickly do a rough evaluation. I'm not very keen on giving targets here at this point because We do not have the end point in play. Like we do not have a precise pinpoint level for wave 4. It could still be continuing sideways and so on and so forth. So that's why I'm not very keen on giving targets. But yes, roughly speaking, we look for 89.36 in sight because that's what aligning with our trend line. Right. Nothing much to add here. You get the rough idea. The reasoning for the targets and the count is more or less the same as our discussion, as per our discussion in the last webinar. Right. So we wait for this up move to continue. And since I'm already long, I'll just continue trailing it, being mindful of the fact that this market can go sideways within this box range that I'll mark 87.85 to 84.84, let's just say. So that is the range it will continue. It can continue to be in sideways in, if not straight go up. Yet our hypothesis suggests upside movement. Main hypothesis, second hypothesis suggests sideways and then up. Right. So that's our analysis on crude oil. Nothing much to add here. If you guys have any doubts, questions, you can just post them in the comment section before we move over to our next chart. Thank you guys for the clarification. And let's head over to our chart of gold and not taking any or wasting any time because I do have multiple positions open on multiple things. So I'm kind of busy. So what I have to do with this one is determine if this fifth is complete and not the kind of thing I want to do in a strong uptrend. We want to let the luck play out. So basically, again, one of those cases where I'll just like the trailing stop loss or just like to move the trailing stop loss on the counter rather than caring about booking profit. But who knows, I might as well do that. It is substantial at this point. So gold, starting off with our last webinar discussion. This is the last webinar which was conducted on 5th. We had discussed gold somewhere around here. Let's see what I was saying on gold. As you can see, the account is very clear. We were pointing out that wave 3, 4, and 5, that is at least 2 minimum legs up, were remaining on this counter as per our last analysis. And I was already long at that point in time when we were doing this analysis. By the way, I have taken a lot of trades this week, and specifically on gold, I was trading it a lot. Probably I can just show you here as well. We have multiple trades on gold's chart. So where's that? Yesterday, and yeah, there was one trade which did not work out in this week, and that was also on gold. I was trying to do a scalp short which did not play out. Not a very good idea in a strong uptrend. So here are some of the trades. Where's that? Trailing stop loss move above entry, trail to 3257. Where is this starting from? Yeah, there is one of the trades. Oh yeah, this was the trade which was discussed in last webinar. That's a good thing. I came across that. So let me just point that out. So in the last webinar, if you guys recall, at the beginning of the webinar, I actually took a position which was taken a little bit here somewhere because it was this chart was posted much later when the webinar was complete. So this is a 1 hour chart. So it was taken around 2300 something. So after this long, as you can see here, it's mentioned in longs as discussed during the webinar. It was posted almost 30-40 minutes after the webinar. So booked profits on all longs. Let's see. Our entry was around 2300, exit around 2326. Yes. So this was the first gold trade. And all of this was posted live. Edit partial longs. Yeah, there it is. Edit partial longs. Stop loss 2293. Let's see how it went. Trail to 2357. Let's open the chart. Target hit. So this was the second entry around 2337, exit around 2361. So again, two longs both worked out. Yeah, this was a scalp trade. I was trying to add some shorts basis on a short-term analysis for a quick trade, and it did not work out. Our stop loss was hit. That was the only loser in the whole week. And then again, I did longs, stop loss 2, 3. Let's see this one. Trade partial longs, and then is still holding. So this is the trade I'm currently in. I did around 2357. Partial profits have already been booked, and from 2357. Where are we right now? We are right now at, let's see the actual chart of gold. We are at 2415. That is a good move. Let's see by plotting that on the chart. Roughly 57 points. Trailing stop is around here, 40 plus points. And out of this sum, I have already booked. Right. All of this was, by the way, posted live in our Slack group. And if you are there, of course, you already know it. If not, then you can find the dealers for that by sending an inquiry on the said link, which is scrolling below you, or just heading to the website and going to the contact us page over here. Contact us. Right. So now what's the case with gold? Case with gold is, what I like to do is point out on a higher time frame chart. First of all, is it has cleared off a very, very long term resistance. If you guys remember, I was pointing it for quite some time, not just this week or this month, but in the past 2, 3 months, we have covered a lot of gold. Just for the guys who are new here, and by the way, the guys who have been following me for quite some time, they must have watched me live. If you have and you remember it, do not forget to mention it in the live chat. It, of course, goes on screen and becomes a part of the information new viewers will watch. So, anyways, I've been covering gold since a long time, 3 months ago, and we were considering the breakout in all these webinars. You can see a lot of importance on gold, even in the 99th, and then again in the 102nd, again in the 105th webinar, and now in the 107th. So it's not like I have been catching the movements for past few days. We have covered gold in extreme detail in the last webinars. I actually would suggest you go and check some of these past takes. Specifically, I think these ones, 92nd, 91st, there I predicted the upcoming breakout and why this breakout is going to be important. In specifically set for lifetime highs. Yes, 91. Webinar number 91, gold set for lifetime highs 4 months ago. So this is where we actually discussed why I think there can be a huge up move in gold, right? And some signs of it were discussed even before that, 1 month before that, 5 months, 88th webinar. So as I said, this is nothing new to us. We already knew this was coming, and that's why we are able to take benefit from it. And I highly suggest you guys to look into it. As Martin was also pointing out, I've been calling, yeah, you've been calling it all this time. Thank you, Martin, for letting our subscribers know that. And Martin has been a good follower. I think he's in the video course as well. And one thing again, guys, if you are not understanding what I'm discussing, Jibber Jabber, what is Elliott Wave 12345, then again, I recommend heading to the website and checking out the video course. It has already 1600 plus students, and this is nothing like a beginner's kind of course. It is beginner to intermediate level, so you will have to put some time and energy into it, but does have real value in it. Right. Anyways, getting back to our discussions, what I've been talking about gold is, long story short, if you have not followed all that stuff, we did clear the very, very important level 2250 very recently, and above that everything is possible. It is open to extremely strong up move from here. Now I'm not saying it will go to sky high, right, but it is definitely possible that it can take out much higher levels, 27, 29, and maybe even 3000. Why? Because if we just look at the bull moves, these bull moves, when they come, they, let me just show the percentage view, they can give as much as 169% or whatever, right? And this is substantially important. Again, as I mentioned, check out the past webinars. I can't go in too much detail here. 3 month or 3 year resistance and all that. Check all that stuff out, but just look at this here, just to give you a short outlook. This is a small range on a weekly chart. In actuality, this is a 3-year range starting around August 2020 to October 2023. And if you look at the bigger range, this one started in September, October, something 2011. 2011, just keep that in mind. And this is 2024. So it has broken both of these ranges. How do I know this is not a false break? Well, I have my proprietary techniques. Of course, I'm not going to discuss all that stuff here, right? Uh, but I do know that range is broken. So there are two things only which are possible. One, that it just goes and gives the exceptional up move. Swing perspective, keep in mind, I'm not talking about daily chart or weekly, or sorry, daily chart or 1 hour chart or something. Swing perspective means buying and holding it kind of perspective. So huge upside is possible from here. There is no doubt about it. Second possibility, which is a less likely scenario, is that maybe this range is broken and this is going to make a final high somewhere near the current level, which is a bearish scenario, which is basically me saying that this was a 3 and this was a 4 and this is the fifth complete. Again, everything is possible in Elliott Wave. We have to consider all possibilities, all possible scenarios. That what makes it an analysis. And this is the bearish analysis suggesting that this was a 1 up, 2 down, 3 up, 4 down, and this is the fifth up. Even if that is the fifth up, I still think it has at least one leg up remaining after a correction. So we are expecting at least a minor correction and then one more leg up. That's the most bearish scenario. Correction, minor correction, then one leg up. Most bearish scenario. And I don't even think that's the case because, as I said, this has broken a multi-year range, right? And when a multi-year range breaks, things like these happen. So keep that in mind. And don't take my word for it. Do your risk management. Anything can happen in the markets. Just because gold did it in 2007 or whatever does not mean it will do it this year. If it does it, I'm already long, so I don't care. And I won't care even if I get out 10 minutes after doing this bullish analysis, right? I'm just a trader. I get in, I get out. I don't hold swing longs because of some long-term analysis. My job is to get in the middle, get out in the middle. Anyways, those of you who can hold longs, that's bias. Getting back to our main theme. Short-term wise, what we think is happening here is, as I said, is that, let me get 15 minutes. Yeah, from here we can take it. Short-term wise, this is our point of reference. I'm not going to discuss the whole count, kind of irrelevant at this point. And we are expecting this to be a third wave. Some correction may be expected here. And then another leg up, right? So the simple way to deal with these kind of situations is what I'll do is mark a possible wave 3 correction here. And if it goes and shows a deeper pullback, like goes below 38.2 or even 50%, actually 50% generally will be the better target in case you are holding longs for quite some time, then the stop loss will come around 2370. Now, because I have been holding for quite some time, I can take that as a stop loss. But again, depending on your entry, things will vary. So long story short, what I'm really saying is that we can expect minor corrections here, but overall gold up move continues. And since I've been holding longs and getting in and out of long positions all this time, I'll just carry the current one, keeping my stop losses around 2380 and even higher levels. Currently, my stop is around 2398 something, I think. So the idea will be that if it goes and gives a correction, my position will be taken out. And if it takes out the high again, then I'll look for a breakout trade again because we think much higher potential is remaining. Nothing much to add here. The count pretty much says everything else itself. Kind of a very detailed outlook on gold we have today, even that was not in the plans. So yeah, that's about it for gold. We expect minor corrections and upside to continue. If you are holding longs, continue with trailing stop losses. If not, then we'll look to see if this follows this count or what. Let me know, guys, if you have any questions or doubts on this particular analysis. Otherwise, we'll move over to our next chart of S&P's 500. What's that? S&P's 500. Let me give me a moment here. Let me just check a few of the positions. So you guys still with me? Martin, Louis, Sushil. If you are, let me know in the comments. All are in green. Yes. So yes, let's head over to our next chart of S&P's 500. Yes, nice of you, Martin. And let's see what S&P's 500 have been doing all this time. I'll just head over to our last webinar's recording here. S&P's 500 discussed around somewhere here. Let's see what was being said precisely on this chart last time. So what we have pointed out very clearly in the last webinar and is visible in this webinar's recording as well is that we expect a B wave correction here may have completed. I did not have a confirmation, just to be very clear. Thank you, Louis, as well, for letting me know. So as I was saying, we did not have a confirmation. That's what we said in the last webinar. And but our main idea was that this wave B was complete. You can check the whole discussion. It was, I think, having more value and more detailed discussion than what I'm just concluding right now. But the main idea was that if the B is complete, then it can see some correction, even if it's not a B. I think if yeah, that was the main hypothesis, that if the B is not complete, then some minor up lag will be there and then down. Let me just play the video again. And the second hypothesis was that this was a 3 with the wave 4 in play, and even the wave 4 was suggesting lower than 5,000 levels, right? So that was the main theme, that whatever the analysis is, the bearish possibilities have opened up, and those bearish possibilities cannot be ignored because they are quite big. This is a daily chart, by the way. So now what has happened over the week? I should have added shorts on it, but because I have way too many positions open, I did not. But yes, it is giving me a scalp short. What I'll do is, give me a moment here. I'll just add minor shorts on it. So I just added some scalp shorts. I'm expecting nothing much, that the market will go lower than this 5135. I did see the position here that some downside possibility is, but then I have way too many positions open and do not want to expose too much. Anyways, the count remains the same. Last week was 5th April, somewhere here we suggested. Let me be more precise here. Yes, somewhere here we were suggesting that either the B is here and this market will go down much lower for C, or this is the 3 here and going down for a 4. Did not have any confirmation, as I said. But since then, the market has remained sideways. So there are two possibilities which I'm thinking on this market. First of all, I think that this could be a W and X and a Y correction, basically a flat kind of correction. Sorry, not necessarily flat. This is a kind of a complex correction, but it looks like a zigzag. So double zigzag, basically, that's what it's called. So roughly speaking, that's what you call it. W, first leg down here, correction up, and next leg down here. Right. So what we expect is that this Y is most likely playing out. That's why I said I'm not looking for too much here, because once it breaks the low, it is expected to give correction, and then I can keep holding it. But as I said, I'm looking more for a scalp perspective. So that's the minimum we are expecting. WXY targets being very near already. 5121, followed by next one is quite low, actually 5009. So 5120, 5010. These are the expected levels, the minimum being 5121, which is very near to our current level, is where we think this market can take a stop, right? So, long story short, around 5121, if the market stops, there is a possibility that this WXY correction is complete. Maybe, just maybe, I'm saying this market may reverse. However, keep in mind, it can just give another X and another Z down. So, it can basically go here and then come down again. So we don't know all that. So that's why short term wise, bearish, no longs on this counter at all. Even stock specific. If you guys remember, I did mention in the last webinar that this is a time to go stock specific. And by stock specific, I basically meant that if you guys have knowledge of sector analysis and figuring out which stocks to short, then there are many stocks which have given an extremely good short play here. It's kind of logical. An index is nothing but an average of multiple different shares. So that is exactly what's playing out, right? Still a good time for that short plays. Can't get into too much detail on all that stuff that goes beyond the scope of these webinars, and we don't have that kind of time here, or I don't have kind of willingness to share that much information. So stay out of longs, buy short for the time being. No sign of bullishness. Levels 5120, 5010, and that's about that. If you guys have any doubts or questions, you can just post in the comment section. Otherwise, we'll move over to our last two charts, Nifty followed by Bitcoin. And of course, if you have been in this webinar so far, do not forget to hit the like and share the content. I mean, really just definitely share it to at least 5 of your contacts. Let all the people know how well we are tracking the markets and trading them, not just tracking them. All right, with that being said, let's now head over to our last two charts. First one is going to be Nifty. There it is. And let's see what was being said about Nifty's chart in our last discussion. So here we have on screen the recording from the 109th webinar, Nifty being discussed around here somewhere. Yes, and as you can see here, our main bias, which we discussed in the last webinar, was very clear. We were expecting 1, 2, 3, 4, 5 possible impulse completion, perhaps continuation. We did not have any clue, and I did mention one thing very clear, that the upside, or what you call the, not the upside, the safe upside was over. We were actually able to predict this leg and actually trade it in live. But once this last high was taken, everything after that is risky. It could go up. It could actually go as much as up as wants to, but the minimum consideration is over. And given the political situation and the global market situation, it can reverse from here, right? So since the minimum upside is over, where can it reverse to? We did suggest that it can go to 21,300 and perhaps even lower, right? We did not have any confirmation for it. And let's see what's the story right now. Let's go to daily again. Same chart again, and those of you not familiar, what I'm basically talking about, the wave 5 and stuff is. And what Martin's saying is always sharing. They are saying at this rate you are sponsoring me. This content is gold. We'll keep sharing. Yeah, thank you, Martin, for your continued help in this regard. And we were actually able to hit 1,000 views on our last webinar. Well, I think it may have something to do with your continued help, right? So continue doing the good work. And the other guys who are here, Luis, Sushil, of course, is sharing, I know, and others who are watching it later on, kindly do share it. I put a lot of energy and work in it, and this kind of information generally is not available for public viewing, and is generally behind paid walls. So your continued patronage is definitely required, right? So yes, as I was saying, what we have here is a possible 1 up, 2 down, and let me just do this, 3, 4, and 5th, right? Now, I did mention that in the last webinar again, but just to clarify for those of you new here, we are talking about an impulse structure in Elliott Wave terminology, which will have 5 legs in it. And once the 5th leg is complete, we can see a fall. The thing with 5th leg is, as long as the wave 3's high is taken out, we don't know if it will go any further up than that or not. So in this case, the wave 3's high is taken out, as you can see. So we don't know if it will go fly high from here because it is open for upside, right? Or it will just reverse. So that remains unclear, and that is kind of the thing here right now. So the thing is, I am seeing a lot of weakness on the index. Literally, have not done the thorough sector by sector analysis, which I generally do. I have taken a quick look at it, and I did not see broad wide weakness. But what I know from my years of experience is, generally when a sudden fall comes near these events, it will not give you a very clear sign. So the lack of strength in the index itself is cautionary itself. So what I'm basically suggesting is that I will look for longs, but only breakout longs, because breakout longs are the only viable possible options at this point in time. Only then I can be sure that this market is doing something. So in case we see this market take out this last high, whatever this is, 22,750, then I will consider longs, because then it will become a case of a, let's say, one up here and maybe a correction down here, and then so on and so forth for three, right? So yes, in that case, I am interested in longs, but as long as it does not take out the high, I'm not interested in any swing longs whatsoever, because if this 5 is complete, because we can actually count the whole thing as an impulse already. And what I'm talking about is that the internal structure of this wave 5, if we expand it, it will again have 5 waves inside of it. And in this case, they are already complete. So clearly, we have reason to believe that this market can just reverse from here. And one more point, the way this market has completed here is also weak. Again, can't get into too much details here, won't be possible in this kind of public webinar. And actually, it's not even possible in privately. These are the stuff I only disclose with students. But yes, getting back to the point, I have a reason to believe that there may be some signs of reversal here. Right, we will see how it plays out. And I'm not in this market at all, neither long, neither short. So I'm looking for maybe only short-term plays, and we'll probably look for what do you call stock specific and sector specific plays. And in case you are following me from the past analysis, you must have noted I had mentioned stock and sector specific plays on S&P as well as Nifty. Keep in mind, both are indexes. And when things become unclear on indexes, but sign of strength or weakness is there, but unclear on the index itself, then it is always the sign that you need to go more deeper into the market, make stock and specific sector plays. Right. So that being said, again, that goes beyond the scope of these discussions. I cannot get into every sector and then discuss every stock, and that kind of research is just not possible to discuss publicly. But you got the idea. Stay out of the index for now, unless you really know what you are doing. And upside is possible, extremely big, but only on breakouts. Otherwise, it's a cautious market, or it's a market where you need to be cautious. I don't have much to add here. Yes, I have blabbered a lot, but again, don't have much to add here. That's about it on Nifty. I'll just move over to Bitcoin, which again does not have much action happening. Hello, Shrikant. I believe that's the name. Hi. So last thing, let's go and check Bitcoin. As I said, there is not much happening on Bitcoin again, but since we do check it in every webinar, let's not break the routine and just head over here and see what's being said and what happened on this counter. So here's a chart from last webinar. Let me just play it again, the 109th recording it is. And what I've suggested, as you can see here, is we are looking for a clear breakout play if the market goes and sustains above 73,600. Then and then only we'll be looking for long trading opportunities. Otherwise, we are not interested in this counter at all. And so far, nothing like that has happened. Kind of uninteresting market so far, as I can say, for lack of any other words. Certainly, there are some short-term plays which could have been made here, but I never made them. Where is the chart? Yeah. So some short-term plays, as I can see here, are if we consider this as a point of reference around the price level of 60,776, we may have what you call a possible zigzag kind of play here. Again, if the market holds above 67,500 and then breaks this high of 72,355, we get an opportunity for a wave C here. right? So that's one short-term play that I can see here. Break of this last high. We can use our 1:1 and some other deductions here like 50%, etc., etc. I'm not really interested in it, but just for the sake of discussing it, this is the kind of play we will be looking for in case this works out. 50% is not very high in itself. It's actually at the high. So what we'll be looking for is the immediate level 74645. That's a short-term play here. Holds above 67,500. Breaks high of 72,595. Expect 74500. That's this level 72640. As a short-term play here, but again, I'm not much interested in this market. It has been doing this a lot of time. It just goes into big sideways ranges and continues doing it for a long time. And honestly, I'm not much of a fan of trading it, given the high charges from the brokers end as well. So I kind of tend to avoid it. But yes, that's the view. As long as the market sustains within the range, which is the same as our last analysis, we do not want to commit any swing positions, and only above establishing above 36,73,600 will be interested in considering any possibilities of long. And just to be clear again, one last point here. Above 73,600 does not mean that the market goes and clears 73,600 and we go long, which is somewhere here last high. That basically means it goes above and possibly takes support or spend some substantial time with some important or expected patterns there. Only then we'll be looking for longs, right? So this is not going to be a simple play that break of 73,600 and then long, because it can give a false break and then get back into the range. That will be what you call a range expansion, something like that. So nothing to add on BDC. That's been all for this webinar, guys. And if you like the content, again, as I mentioned, do not forget to hit the like button, share, and subscribe. If you are new here and if you have been following me for quite some time, definitely share the content with at least 5 of your contacts. And that's about that. I'll see you in the next one, guys. Take care. Bye.